guys, welcome to the first episode of Live, Laugh, and Loans.
Yay! And I'm your co-host, Shelly Panzarella.
And I'm Myra Talley.
Also co-host.
Yes.
This is our show.
Yes, exactly.
Our very first show.
Very first show.
Are we nervous?
Let's do it, yeah.
We're excited. We're fire today, actually. All right, so what are we going to talk about today?
Lots of stuff. We got interest rates seem to be a very hot topic. Everybody's kind of curious as to what they are and where we are today.
So let's jump into that. Actually, let's stop. So collaborate and listen. Just kidding. Okay, so the purpose of the show is for us to really get out and educate our clients, our realtor partners. And if you're a loan officer today and you're looking at maybe joining our team, maybe we would be a great fit for you. But this is the purpose of our episode, or this would be the purpose of our show, is to really get out there and educate our clients. And so now I think we can start with, what are rates today?
Yeah, rates today, I would say they're averaging.
Are you afraid to say it? We're a little nervous because rates have been inching up a little bit.
Yeah, but they're about 6%.
Yeah, 6% for a 30-year fixed.
Yes.
Which, if you think about it, I mean, I know sales prices are a little bit higher, but we've seen this rate before.
We have.
Right?
Definitely.
Down payment assistance were this high. And
many years ago, I remember, with the down payment assistance, we were easily like 6.5%.
Yeah.
So it's higher because we've been accustomed for the last 2 years of hearing 2s and 3s. So now that we're back in hearing 5s and 6, it's more of a shocker.
Yeah.
But it's actually not really a bad rate.
And I think if we focus in on the payment for our clients, which is what we've been doing, right? It's just not to say that you can't focus on the payment, the interest rate, but when we're focusing on the actual payment and the reason why our clients are wanting to buy a home, that makes it the interest rate goes away. It doesn't even become a talking point, right?
Absolutely. I think that's one of the most important questions to ask, is not necessarily what purchase price are you looking for, but what's your comfort payment? Mm-hmm. What would you feel comfortable paying each and every month aside from interest rate? Because at the end of the day, when our credit cards or whatever, if we have an interest rate, those are outrageous. They're like 20%. Yeah,
you're right on that. And I mean, nobody realizes that, right? Just because
we're so used to it.
Exactly. Something that was kind of cool that came out, I think it was in Redfin. They talked about just where the interest rates are at today and kind of pushing, expanding our buyers' at comfort level, like you just mentioned. But I think if a buyer wants to buy a home, and what they're experiencing probably today is also what it would look like for them as they're renting a home, that difference is not that much anymore, right?
It's not.
There's not a huge gap. We're talking about rentals the other day where somebody you said a single bedroom apartment was renting for.
It was
like just in Henderson, right?
Yes, I believe it was somewhere in the 1,500 range for one bedroom, one bathroom apartment.
Yeah. And then I had somebody yesterday talk about their kids actually just went into a 2-bedroom, South Summerlin for $3,200.
Yeah, that's
$3,200 in an apartment. So could we buy a house today?
Absolutely.
Yeah. And
how big was that apartment? I'm sure you know.
Exactly. I mean, maybe some of the amenities would be okay, but I think when you think about it from that payment standpoint, and they locked in for 1 year only, so that the likelihood would be that rent amount would go up, right? Where in a case of purchasing a home, unless you're getting an adjustable rate mortgage, which we'll talk about as well, but in a 30-year fixed mortgage, that should stay consistent outside of what can move in your fixed rate mortgage?
There's 2 things that can move. It's just going to be your homeowner's insurance and property taxes.
Right. And those could be minimal, right?
Correct.
They're not going to be like a landlord who's like, oh, now that I can charge you $3,200 today, next year is going to be $3,500.
Yeah,
you probably won't see that big of a jump.
So when your property taxes increase, it increases annually, but it's split up for 12 months. So it makes it very minimal that you would see the change on a monthly basis.
Right.
Same thing with homeowners insurance. Maybe $100 for the whole year. Obviously it's going to vary, but that's when you talk about a fraction, it's very minimal.
Yeah, and I think that's something that people don't realize is, as we talk about inflation, one way to kind of curb the inflation of it in your rental side of it or your mortgage payment is going to be getting into a fixed rate debt, which is your house payment.
Exactly.
Right. So let's talk a little bit about ARMs. I always do that every time.
What she means is adjustable rate mortgages.
Exactly. Yeah. So, because that's a lot of news right now too, is people are asking a lot about what the adjustable rate mortgages look like.
Yes.
And What are your thoughts on them?
So, I mean, they can be a little bit risky. I believe that they're for a very specific buyer. They are, what I think I saw that they've doubled just within
How many people are using them?
Yes,
Yeah.
within the last year. I believe
Sure.
that's what I read. But it's very risky, and you just have to know exactly what you're getting into when using them.
Yeah.
But as far as rates, I mean, what is it, like a whole point lower?
Yeah, it can be. Yeah, I mean, I definitely think it's for a borrower who's prepared for it. It's not somebody who's, not to say a first-time home buyer couldn't do it, but it definitely is for somebody who is prepared for it. And I mean, because Rich, my husband, was the one, when he first bought a home, I put him into an adjustable rate mortgage. I was his lender at the time, not his wife. Actually, yeah, it wasn't his wife at the time. So he made a good decision without me. Anyway, so he went into an adjustable rate mortgage, and the intent of it was that we would pay off a car with a lower payment, and then once it adjusted, we would be prepared because that car payment would be paid off.
Right. So typically their terms are, we're at 5, 7, 10 years where it stays at a certain percentage. And then after that first initial 5, 7, or 10-year period, then it adjusts to market rates. So if market rates happen to go down, then you would totally see, you would still be saving. But if those market rates go up, then that payment would also increase. So you would have to be prepared to pay for that difference.
So it is really important that you work with the right lender to explain what an adjustable rate mortgage is, but also how it can affect you, because it could be a good opportunity for you for the right reasons and the right time. Exactly. But then it could also be something that you want to make sure you are prepared for, like you said, because it could actually go up. And if you're not prepared for that, that could put you in like financial duress. So
Correct.
What else is going on?
Let's talk about credit.
Okay. Oh yeah, got some good stuff on that. Go ahead.
Okay. So findings from just a year ago, around this time, median credit score was around 761. We're now seeing it around a 735, which is still really good.
Yeah.
But that's down from a very good from just a year ago.
And it says here that some of that is because, and I think it is, the debt to income ratio has increased, right? We're up to like 39% versus 35. So
Correct.
Meaning that some of our consumers are spending more money or putting it onto their credit cards.
Yes. I actually saw an article that was this past Christmas. There was more spending there than there has been in a long time.
Oh, yeah.
And that's when all the credit card debt started to happen.
And we're seeing that now today because we've had a few clients that have come to us asking about cash out refinances or home equity lines of credit, which this is probably a good time to talk about that too. But in a couple of those instances, even though they went into the higher interest rate for the cash out refinance, it actually saved them. I mean, one of them was almost $2,000 in overall debt, which included their credit cards. I think we paid off a personal loans and a car payment. And then in the other case, about $1,000 difference.
Yeah, I actually like that you brought that up because a lot of the times people think, hey, interest rates are so much higher. Why would I get out of my 2-3% interest rate to go into a 6%? But all the payments that they have, the overall payment, like you said, goes down.
Yeah.
So yes, your mortgage payment would go up by increasing your interest rate. However, your overall debt
goes down.
now goes down. So you're actually saving a ton of money depending on your scenario.
Plus, if you think about it, you mentioned credit card interest rates are what, 20%, let's say, give you the benefit of the doubt, say it's 15% for credit card debt, right? And even if it's like some personal loan debt, maybe 12% on that, even if you got into a cash out refinance and it's a fixed debt at 6%, not only is it a lower interest rate, but it's also, you could have tax benefits from it, right? Because it's a mortgage interest versus credit card or car payment or things like that. So there definitely is opportunity for people to look into that, especially as we're noticing here based off of the report that consumer debt is higher today, right? What about the difference between a cash out versus a home equity line of credit? Do you see a lot of clients come in for HELOCs today?
I say more than normal. They're kind of inquiring just because, again, they're thrown off by the interest rates. So they're inquiring about the home equity line of credit. I've honestly, once they get information on the HELOC, a lot of them I feel are kind of nervous about it just because it's adjustable for the most part.
Yeah, that is, I think in our current situation, most of our investors could, I'm seeing a lot of investors who are like, hey, I just want to have an open line of credit just because, just in case something happens, if we do go into the recession and I want to have enough cash, so to speak, to be able to take advantage of an opportunity. But I agree, if it's a client coming and saying, hey, I want to move all of my credit card debt and consolidate it into home equity line of credit, that actually makes me a little nervous because it doesn't necessarily secure them and keep them at a lower payment. Correct. Because it varies, right? And you can get a fixed second mortgage, but I don't know that I think they're few and far between today. Most of them are home equity lines of credit, right? Yeah. So what about the upcoming news that credit score that's happening July 1st?
That's actually pretty exciting.
Yeah.
So what it is, it's medical collections are now going to be reported differently. So from us looking at credit reports, I feel 90% of the credit reports have some sort of medical collection.
Yeah.
And a lot of the times I feel like it's a billing mistake.
Yes.
Most people are like, hey, I have insurance. My insurance should have covered it. Well, there's always those second billing, different charges that pop up and somehow they get missed. Bills get thrown away because people don't even open them. They're just like, oh, my insurance covered it. I'm going to throw it away.
Yeah.
And, they move on. And then next thing you know, it's on their credit report as a collection.
Right. And then they don't find out about it until they're either buying a house or a car, right?
Exactly.
And they're like, hey, your credit score is so low. Although they do have the credit reporting agencies that show, like the Credit Karma and things like that. But this is great news for those that, those who have paid their collection. So it's zero. If you've paid your medical collections down to zero, they'll actually remove them from your
completely.
Yeah. So you don't have to worry about going in to try to get them deleted. You don't have to worry about calling the creditor to fight it. They will automatically be deleted. So you should see an instant lift off of just that, right?
Right. And even all those tiny little medical collections, now if it's $500 or less, they're just not even going to report it onto the credit report.
Yeah. Because I think that for me catches me. So when I go into the doctor's office, they always tell you to pay copay. So I pay copay and then we come out of it, right? And then all of a sudden maybe something they had to do during the doctor's appointment, like I think I had an asthma treatment one time and that was an additional charge, right?
Yeah.
And so they don't bill that necessarily, but then when they do bill it after the fact, I had a little bit, I have an additional copay, so to speak, because of that other treatment that was done. And I'm thinking like, oh, it's just a typical whatever that's being done. It should be handled with my copay, but it was an extra billing.
Yeah.
So I think sometimes you forget about those. And that was like, what, $15 even?
Yeah, that happened to me just the other day as well. Regarding the co-payment, the company switched its computer software program. So it didn't pick up my initial co-payment, or what is it, the deductible payment. So they were billing me again. And I said, can you please double check? I was like, because I'm pretty sure this has already been paid for. And luckily, yes, they found out their mistake. But had we not looked into it sooner, that would have been reported. And if I wasn't paying attention or didn't have credit monitoring, it would have impacted me.
Oh, so your credit monitoring actually popped up that told you that it happened?
No.
Oh.
But I'm just saying.
Myra's very diligent about making sure those things don't hit her credit.
Yes.
But that actually is a good point, because one of the things that's going to happen the first half of 2023, so you mentioned anything less than $500 will not be reported. Now, that's not to say that you don't pay your medical collections, and we're not an advocate of that, but I would definitely say that will actually help, right? In cases where those will fall off. If you do have some, like a $15 or whatever the copay amount, and you happen to just miss it. The other thing is, today, a collection goes, or a missed medical payment, today a medical debt goes into collection within 6 months. With this going, starting July 1st, it'll actually take a year. So it'll give you time to resolve that before it reports onto your credit and then negatively affects your credit.
Yeah,
so
those are big steps in the right direction. Just because one collection hit your account can cost you, anywhere from 100 to 150 points drop.
Yeah.
So that's major, because a lot of people, they come in, they're like, oh, my credit score is, 750. And when you run their credit, it's like 600. Exactly. You're like, what happened? And that's when they discover the medical collection, when it's too late. And it's not just medical collections, but, just that's how much of a big impact that they could do to your credit score.
Because it's a negative, one little negative
Yeah.
thing on your credit. And I would say if you had applied in the past for a mortgage or even any credit, and you had that was one of the reasons, you should take a look at where your credit is at after July 1st to see how fast it's been taken care of. But you should see that impact pretty much immediately after July 1st. And then if you're looking to buy a home and you want to see where you're at as far as credit, of course, feel free to contact us to go over that. What else? What else we got? So we have our weekend coming up is July 4th.
Yes.
So this episode or this show is Live, Laugh, and Loans, because we live, obviously, and we do a lot of loans.
And we do a lot of laughing.
And we
too.
do a lot of laughing. Yeah. Our first episode, so we're a little nervous. We're not going to break the ice with you guys just yet. But just wait. Make sure you stick around to the next episodes. So what do you have planned for July 4th?
For the past few years, my husband loves to go to Moapa.
Oh, yes.
And he loves to it's like a thing. You just park out there. You buy your illegal well, they're legal there.
We're not an advocate of that either.
You just light them up there, and there's like a big old desert, and there's tons of people just lighting their fireworks. They usually have like some sort of fair with live music and stuff like that. So maybe we'll do that again.
So you've been doing it for the past few years?
I think 2 or 3 years now.
So the one thing I would be worried about is like every time there's fireworks, there's always like the aftermath of the fireworks that like pop on your hair, or pop on your houses and stuff, and your cars. Do they have like a hose?
So it's like a launching area. So
so
all
way
the
away
cars
from everything.
are parked a little bit behind. And then they have, so one year there was like a little bit of fire, and within seconds, like all these like marshals came from everywhere. The thing was out. So it was kind of like calming to see like how fast they responded.
That's cool.
And you couldn't even notice the presence of so many, like security around, but clearly there was. So
and they took care of it pretty fast. That would be the only thing but it sounds like they've got that taken care of. What about dogs? Do they have pets out there? Because what do you do with your dog? My dog gets crazy when...
Doesn't your dog wear the suit?
Okay. Calling my dog out. So my little Kiko, because she's a little anxious. And I'll send you the picture of her. So for Halloween, we got her this big hot dog costume. What we noticed when she'd put it on, she would literally just sit down, and it was like a thunder blanket, right? It really calms her down. So anytime, like Memorial Day, I feel like New Year's Eve, and then of course 4th of July, we have to put her little thunder blanket hot dog costume on to calm her down. But because otherwise she gets like super scared, and she like freaks out. But I think a lot of people prepare for that for their pets too.
Yeah.
So what do you do for Sunny?
Sunny, she actually, so far, she hasn't been scared. So the first time we actually got her July 5th is when we actually brought her home. So I was kind of excited about that because I was like, poor little puppy, she's going to be so scared. But last year she hung out with us outside while the kids were lighting the little fireworks.
It didn't bother her at all?
It didn't.
Wow.
This year she's a little more nervous, and I'm not sure why. So we'll see how this year goes. But we just act normal around it, and she seems to
be okay.
Yeah.
I act pretty normal around it. No, our dog, like right now, they're popping them off just for fun or whatever. And the other night, she comes up and sits on our head, which is not on our bed. I'm like, what is happening? So of course, it's that time of the year where they're popping them off. So she freaks out, and she just like shakes, in like all like nonstop shaking, and she can't stop until you put that little thunder blanket or little hot dog costume on her.
That's cute. You got to upload a photo of that.
Yeah, I will. We'll for sure put that on there. All right. Well, that is our show for today. Episode 1 of the Live, Laugh, and Loans. We did it.
We did it.
Not too bad. Had a little bit of a meltdown, but we're okay. We're not on fire. Make sure that...
I thought we were on fire.
We are fire. We are fire. That's what we are. Poor Beta. He's like, what the heck did I get myself into? All right. So again, make sure we're going to be actually airing this Wednesdays at 1 o'clock, every other Wednesday at 1 o'clock. And we're going to talk about just all things for mortgages. And of course, because we are moms and we love to live and laugh, we'll definitely be talking about that as well. So anything you want to say before we break out of here?
If you guys have any questions or any topics you want us to cover, just comment down below, and we'll be sure to cover that on our next episode.
Awesome. And make sure that, I have to say this, you have a happy, safe, and sane 4th of July. Yes. We're out. Bye.
Bye.
Bye.